Hey, Tim Sykes here with another live trade alert. I'm trying to do this, or not a live trade alert, a live trading video. Let's see if I can get executed. Ugh, what did I get? 1,700 shares. All right, the market is closing. I want to do a quick analysis on this trade. I'm not going to chase it because, frankly, I'm buying into panic here, and I want to explain exactly why I'm buying this. And we have 4 minutes left until the market closes. This is my other 3,300. Usually I would try and take a full position, but with this one, it's not a very volatile stock. So I think that this lesson will purely be just about a decent little trade here because it has good risk reward. Not that this is going to be like any major profit here. I have 1,700 shares. Let me pull up a little SSS. 1 second. This is the SSS. If you're familiar with it, it's how I basically grade stocks and how I judge them based on these 7 key indicators. You have to watch my trader checklist guide to really understand this. We have 2 tickers here so that we can understand it one ticker at different prices. Let me do SORL. Why is it showing 478? SORL 490. I tried this before. And now I don't know if this is actually going to record. This is how bad my internet is. This is why I'm using eTrade Pro. When I'm in other countries, eTrade Pro is my backup. Stocks to Trade is my main software, but Stocks to Trade is brand new, so it's not exactly great on slow internet speeds. So this is my second attempt. Why is this not sticking? There we go, 470. All right, we've got 2 minutes left in the market. Let me just watch the close here before I go into this this trade and see exactly why I think that this is pretty good. Not that this is going to be a huge trade by any means. I don't want you to think that. Sometimes that there's going to be a really big trade or a potentially big trade. This is not one of them, okay? I will not make more than a few $100s on this, guaranteed. That said, I don't mind doing the trade because I think that there's a pretty high degree of probability that I will profit as opposed to losing. And, if you want to start small, especially if you want to take an overnight trade, I know many of you guys are under the pattern day trader rule, so you can't just day trade all the time. This is the kind of a play that, costs me very little. The risk is very little, I think. And, I think that there's a good odds that I'm going to profit, 10, maybe 20, 30 cents a share on this. And even on 1,700 shares, I mean, I can still potentially make, $500 versus the risk of losing, I think, maybe 50 or $100. Especially the fact that I only got 1,700 shares executed. It's kind of funny. Can I get any more? No, people are buying it into the close here. This is my 3,300 other shares here at 470. We'll see if I get executed before the close. I don't think that I'm going to, but yeah, someone came up at 72. Now there's buyers, 72 by 73, and it closes at, 73 by 75 roughly. So I'm up a few cents a share. The market is now closed for the week. Ding, ding, ding. Congratulations. Now let me actually explain why I'm in this trade, because a lot of people think that it's kind of silly for a millionaire to be trading such small dollar amounts. For me, I don't care about the millions that I've made if I can't pass down the strategy to you. I'm in this to teach. That's why I trade with such a small account. Whether I have 5,000 shares of this or 1,700 shares, I take it one trade at a time. And I started the year with 12,000 roughly. I'm up to nearly 100,000. And next year I'm going to start with 5,000. So I'm going the opposite direction as everybody else on Wall Street. So it's not surprising why everyone thinks I'm insane. But I also have the most millionaire students out of anybody. So trading small and taking it one trade at a time, I think, is a very good strategy for a teacher. So while most people on Wall Street are trying to manage millions, billions, trillions of dollars, like some of the biggest mutual funds, I want to only manage my own money. And I want to show every trade, whether I make $50 or lose $50 or make 100 or lose 100. these little trades are what you need to do to build your account, trade by trade. So why am I buying SORL? First of all, this is an earnings winner, okay? It spiked big here on earnings. It keeps spiking based on that earnings and maybe a short squeeze too. What I've learned is that earnings winners can run for several days, weeks, or even months. The biggest earnings winner this earnings season was REN when it spiked right in here from the 7s and the 8s to double digits. All the most knowledgeable, and I say that sarcastically, the most knowledgeable short sellers said that this was a pile of junk here in the 12s, 13s, 14s. They got squeezed. No one really shared their losses publicly. You know, you got a lot of these short sellers who claim to be experts, and then when there's a loss, they're eerily silent, and Twitter really slows down. It's kind of sad and pathetic, but that's the industry that we're in. No one really wants to admit big losses. The reason why I bring this up is because it's not a pile of junk. It's an earnings winner. And earnings winners you have to respect, even if the earnings themselves aren't that good. A lot of people are confused by what an earnings winner is. For me, I look for the reaction to earnings, not if the company makes or loses $1 or $2 a share. I don't care about the actual numbers. I care how the stock does. So REN, I mean, has quadrupled since earnings, which is awesome in just a few months. Let me pull up so you can see the volume was spiking huge and you can see the dates. SORL is really the number 2 earnings winner of the season. Out of thousands of companies, this one just keeps going. And this thing has doubled. And the question is, can it keep going? And for me, you know, I didn't really want to chase it because, frankly, it's not as volatile of a stock as I prefer. And the top here was 485, and it might even be a double top here. Today, it actually was up here. And it kind of faded into the close. So this very well might be the actual top. After hours, you can just ignore the bid and the ask because it's not really traded, especially on a Friday afternoon. Most people are trading stocks like CTRV, which is really a big winner today. And I'm not so interested in this because, frankly, this stock scares me. It's up too much. You know, if I look at it intraday, I want to buy it because it finished strong. But if you look at it long term, I mean, it spiked and then really crashed really quickly. And if you look at a much longer term chart, this is a terrible chart, okay? SORL for 3 years, you know, it's spiked and come down, spiked and come down, spiked and come down, spiked and come down, spiked and then come down. But this is actually changing it up a little bit. And this is the first time you can see the volume. So these spikes don't really matter as much, because now we actually have a lot of volume. And, you know, frankly, I think that this can go up a little more. I don't know exactly where. There's more resistance here at 522 or 533. I would love to sell this at 522 or 533 and make 50 cents a share. I don't think that's going to happen. The big question for me in holding this over the weekend, a small position, is can it break out? Can it get back to 585 or 485? So let's take a look at the 20-day chart just so you can see it clearer. The top here, right here, was 485, and this looks eerily like a top. So I'm dip buying a potential top. Now, why would I do that? You know, common sense says, Tim, you want to buy breakouts. You've said buy breakouts. Yes, I want to buy breakouts, but this could still be a breakout, okay? We don't know if this is necessarily going to be a double top. And what we've seen in the past few days with this stock, in the past 10 days, spikes, drops, gaps up. Here's a spike, drop, and even though it finished low here, it still gapped up a little bit before morning panicking. Here, I think this is probably the best example because it spiked up all day and then finished kind of low, even though it was a multi-day breakout. And then what happened the next day? Even though it panicked, it was still a higher range than the close. It closed here, it looks like at like 450, and it opened, I mean, not very volatile at 456. The question is, can this get back to 485? And then, if it gets back to 485, will it be a big breakout where it can, you know, potentially go to 5? The cool thing is that there's a lot of support in here in the 460s. I bought, remember, my 1,700 shares at $4.70 a share. I did not want to pay $4.73 or even $4.75. $4.70 was for a very specific reason. And it was because there's a lot of support here at 465. So if this is, in fact, a double top and it starts dropping and closed at 473, and let's say it's down, 5-10 cents a share on Monday, I'll be out and I'll lose, 5 cents a share. I don't know if you saw it, maybe in the beginning of the video, we saw a lot of bids here protecting 465. There was a whole bunch of buyers at 465 and 466 and 467. So I'm really not that concerned about this. I could be wrong. I could just be buying a double top and that would suck. But there's a good chance that if I am wrong, I'm still going to only lose 5 cents a share. But I'm more interested if I'm right. Because if this goes back to 485, let's say it gaps up 5 or 10 cents a share, and then it starts running as it tends to do. This tends to morning spike very quickly. I don't know if I would be able to catch it in a morning spike. I definitely wouldn't be able to alert it because it's, the morning spikes are so quick. That's why I want to be in on a Friday. Also, the way that I'm trading and teaching is I want to take overnight trades so that I don't screw up the pattern day trader rule, as I know a lot of you students are in the pattern day trader rule. So you can take as many overnight trades per week as you want, but you can only take 3 day trades. So if I was going to be thinking about buying the breakout on Monday at 485, let's say it gets back up there on Monday, well then why would I have not bought it on a Friday afternoon? Because now if I'm buying it at 485, first of all, it could top again at 485. So I don't know if I really want to buy it right at 485. And secondly, why would I want to waste a day trade if I'm seeing this on a Friday and I hold it over the weekend and the risk is only 5 cents a share? So you kind of have to think about it a little differently. I know I'm talking fast and this is confusing, but long story short, I am more interested in buying this on Monday if it can break out. But I bought it on a Friday because I think my risk is minimal and I don't waste a day trade. And even if it tops out at 485, I can sell for 10-15 cents a share profit. So there were many different reasons why I bought it right now. If it does get to 485 and break out, then it can get to 5. And I would love to make 30 cents a share. And that would be probably best case scenario, to make roughly 500 bucks. Worst case scenario is I lose probably 5 cents a share and I lose, like 50, 75, 100 bucks. So if you're willing to risk losing 50, 75, 100 bucks to potentially make 500, and most likely my guess is that it's going to get back to 485, 490-ish. I don't know if it'll really break out, and I'll probably make like 200 or 300. So on a spectrum of potential possibilities, this has a good profit and a good risk reward for me. And I know that this is confusing to you guys, but this is how I view these kinds of trades. I don't just say, oh, this is a good company, this is a bad company, I'm excited for it to go up or down. I'm looking at all potential outcomes, and this is how I can grow my small account very carefully. So let's run a quick little SSS where it is right now at 470. What did it close at? 473. No, let's do 470 because that was when I was thinking about buying it. That's when I did buy it. So the pattern in the price, it's a potential double top, or it could just have gotten a little ahead of itself, which it's done in the past. And if it gets a little ahead of itself, it's actually a pretty good dip buy. There was one example on the daily chart here. It was a nice big breakout on September 12th over this previous high, but it got all the way up to 365, and then it came down to 335. So it actually came down on day 2 after the breakout, and that was a good dip buying opportunity because then it spiked again and again. Here, it started dropping and then it bounced. This is probably the best example here, though, on day 2 when it got a little overextended. On this one, it got all overextended on day 1. So not an exact comparison, but I think I'm pretty safe buying the dip as opposed to chasing it. So the pattern in the price, it's a potential top, but I'm in at such a low price and I have such a small position I can get out pretty easily. I'm going to call this a 13 out of 20. If it got to 490 and it was a perfect breakout, that's nice because it's a cup and handle, it's a breakout, but you're still not sure if it's really going to keep going. So I would actually prefer that it broke out, though, because that would give it, a little more upside potential. risk reward. Here is why this trade wins, because right now, if I can probably get out for, like, let's say a 5 cent a share loss, and the upside is, we'll call it 30 cents, that's 6-to-1 risk reward. That's awesome. At 4.90, yes, it could go to 5, but what if it goes to 5 and then stops? There's really only 10 cents a share of upside, and then if it stops at 5 and it comes down to 4.90 and 4.85, then it's a double top, and then it could drop all the way to the 4.60s very quickly. So really, let's say it goes down to 4.65, there's 25 cents of downside and only 10 cents of upside. So the risk reward here is actually like a 5 out of 10. It's not very good, even though the pattern is better. I'm actually going to up the pattern to an 18 because this is a better pattern, but it's riskier to buy. Ease of entry and exit on a 1,700 share position, I can get in and out pretty easily. So it's a 10 either way. Past performance history is spiking. It is a strong earnings winner. It has spiked in the past, but I don't know if it's going to really spike big. It's not like a supernova, so I'll give it a 5 out of 10. What time of day is it? So here's the good news, and I actually have to add a chapter to Trader Checklist about this, where I'm specifically buying it on a Friday afternoon because it's better for me to hold overnight, and it's better for a lot of students to hold overnight because A, the stock can spike too quickly and you might miss your execution on a Monday, and B, you're going to waste a day trade. So for me, I greatly prefer holding stocks overnight. So for me, I think this is a 20. At 4.90, it would still be the same time, and that would actually probably be even better because it would be a confirmed breakout. Reason catalyst, it's an earnings winner, but it's kind of late in the earnings win. A lot of the spike has already happened, so I'll give it a 6 out of 10. And this one, actually, I'll give this one an 8 out of 10. Because if it was at 4.90, it would be a better reason. It would be a breakout as opposed to here. And I have to lower this to like a 5 because it's a potential double top. So the reason is kind of tough. Market environment, it's good. It's not great. I'll give it a 6 out of 10. So notice here that this is what is so interesting. And this is why part of the reason why I decided to buy this, not even for the profits, but for the education. It's actually rated a higher trade here on this scale, even though it's a potential double top as opposed to a breakout. And the main reason why is risk reward. I'm buying it on such a dip that, guess what? There's just not much risk since it's already dropped so much. And if you buy a breakout, even though the chart pattern is better here, as you see, it's an 18 versus a 13, the risk reward is terrible because if you're buying close to a top or a potential top or a breakout or a potential breakout, you want to buy as low as possible just to reduce your risk. So this is, these are the two main indicators here that really matter. And this is part of the reason why I released this scale, to try and help you understand, because it's not so simple. Most people just say, hey, Tim, why are you buying a double top, a potential double top, when you should wait for a breakout? It's not that simple when you consider risk reward. So, and the reason in the catalyst is better when it's a breakout, but the risk reward changes everything. And so I'd much rather be in a situation where the total value of the potential trade is a 79 out of 100 as opposed to a 72 out of 100. And again, this isn't a perfect, exercise. It's not an exact science. I probably, if I thought about this for like another hour, maybe this is an 80 and this is like a 73 or a 71. But the long and short of it is that it's a better trade for me buying on the dip here, because obviously your goal on every trade is to make money. And for me, the odds of making money are better buying on a dip, especially when it's not a volatile stock and I'm buying the stock into a big intraday panic, that I think probably some people were selling into the close just because they didn't get the breakout that they wanted. That's not to say, though, that the breakout is not going to happen on Monday. And if you look at this chart, it's so gradually uptrending. It's crazy. So even if it doesn't break out today, okay, boo-hoo, it could still break out on Monday. Even if it fails on Monday, it could test those 485 highs and then, potentially make a run after that. So long story short, this was a very good setup for me to buy on the dip. I'm glad I have a small position, and we'll see how it goes on Monday. Thank you.